Good evening, good evening. Welcome to the live Facebook. This is Martin here, like this live FB. So we're coming to you live tonight, and I do hope that this video will find you in a very good and well rested, I suppose, after your dinner. Those of you who have not dinner, perhaps you can have a later dinner, and once you finish off with some of the things that we are about to share tonight here. All right, so if we are ready, we're gonna be starting that soon. So let's see if any of our friends or members who are usually in our talk do say hello, so as we start the live Facebook talk for tonight. Okay, let's get on started. Good evening. Welcome to another live Facebook on our Wednesday night, which is really the public audience. And tonight we will be talking about how to power your trading and portfolio from a tech and AI sector. Now, one of the reasons why is that I wanted to give some leeway ahead, especially those that are members, as well as those of you who are first time listener in here, on exactly what are the steps needed to figure out what need to be done and what you need to go forward from here. So these are quite important steps so that you are able to differentiate should you find the technology sectors, which has already made its run, which we will also look at it in here, and how to diversify to other sectors. We will talk about some of those sectors that we have. Good evening, Nora. Thank you. It's good to see one familiar faces, Chetna there. Good morning, Nora. So this is where we'll be talking about, and of course tonight agenda will all talking about how to diversify out and really take from where we left off last Wednesday. Now last Wednesday about the great surge. This week is about how we want to specifically diversify from the hot sectors like the tech and the AI sectors to that. Of course we cannot go away from something that is really driving the market, which is the major US sectors, and how the US sector influence to our market, and also look at the diversification step in your portfolio. And what are these sectors part of the diversification? So stay right to the end. We will try to finish everything by in the span of 45 minutes if possible. So let's get on to it. Now, of course, this person, one of the most famous investor, we all know that, Warren Buffett, and especially if you are a beginner, right, or you have less than 2 years experience, he talked about how diversification, right, is a protection against ignorance. It makes little sense for those who know what they are doing. So it simply says that if you know what you're doing, maybe the need for diversification will be minimum. But if you don't know, which many of us, including some of the members and many of you who are watching tonight, like myself, it also makes sense to diversify out. Even if you've just been concentrating on technology stock, there will be time that you need to, take profit and look into the next area where to buy, right? If I say this makes sense, give me a thumbs up. So I want to know the audience are following, and let me know where you're listening from. If you are a familiar faces, just say hi in here, and I would know that we are a face. Of course, the year of dragon, which I continue to advocate many of you, the year of dragon, right? The year of dragon, if you can see from here, traditionally we are always in the positive, and so far our KLSE is up almost 4% where we left off, which is really good. 4% for the first month in January. That's very, very respectable. As you can see before, if you look back, most of the years we are just in negative territory, negative returns. So this year has been good. Is it because of the new government, or we just have the new king? Congratulations to our new king. I think Sultan Ibrahim, the king is from Sultan Ibrahim of Johor. And would the new king make a lot of difference? Definitely, he is very interested in the development on the southern corridor, especially those of you who are listening from Johor would know that there will be a lot of positive economic development, at least with the high-speed railway will be ongoing, and that will in turn a nice stock market boom for the next 5 years. Who knows, huh? Because we've been sideways for the last 6 to 7 years, which I'll share with you right now. So also you can see for this year, a lot of analysts also have grander goals. Okay, so their goals are very grand. You can see averaging 1621. Now why I bring this here, we are at currently 1520, bringing reference to this. So you can see here average is about 11%, and 1545 is the lowest, 6.2%. But I think somewhere we will be positive this year, 2024. It will be a positive year. Where we land, we really don't know. CGS has the highest, which is a plus 20%. We never got 20% in here unless the theory which I have about the foreign funds flow down. Remember, many times our currency and our market are tied to the China economy. You all know that, right? If you came across some articles in the newspaper saying that, you know, when China sneezes, Malaysia catch a cold. That's how close the working relationship is between these two countries in here. So if you look back at the VSA seasonality, that probably tells you where we are. So if you look back, 2017 was the only positive year, and then we got 2020, and then we have, so that's why this year now we already plus 4%. One of the best one as it did before with the 2008, and hopefully we don't have a big sell-off. This big sell-off that we got in 2018 is when the US tariff, okay, tariff war, how do I spell tariff? T-R-R-I-F, tariff war between China. So because of this tariff war, the market cyclically dipped in 2018. 2019 was a good recovery year if you happen to be in the US market. But then for the Malaysian market, it's also pretty bad too. So judging from here, let's take a look at the KLSE futures, right? So you can see from here, this is the market indicator that we have called market stages. Okay, the market stage is still pointing uptrend. So which means it is still in a stage 2 markup. Now any question that you all have, feel free to pencil those in there. I'm happy to answer them, or if you later on want me to look at some shares. So what we are seeing now, we have the takeout of the uptrust, which is a very strong, which means there is a support at 1500 level here, which is this level in here. So we may see, because of this uptrust that we see here, right? So that's a sign of weakness, the uptrust. So important that the market needs to break up, else we're likely to see sideways, and if it doesn't, it's going to boom and then come back down again. So be ready for the next step. All this will definitely be aligned with the US market, whether, you know, we are seeing reporting Apple, Microsoft too. So those kind of shares is important. Of course, there are reports already out that saying Apple is losing up to about 15% of iPhone sales are predicting, and that's why the sales are actually coming down. Now you look from the KLSE, which is the index, you can see market been up in a nice uptrend. Railway tracks are still there. So we just have this one bar pullback, and this is also due to foreign funds selling. All right, but we have the green pentagon, so far it's been great. We don't have anything big sell-off that we have red pentagon, so we have to watch out for there. We are still in the stage 2 early shares, but it may pull back and then another follow through to the upside. So unless we see SOS the next few bars, it may sound like the market will likely to go downwards. All will depend on tonight, but support is still 1500. So you can see here we are 1512. Okay, we have 1, 2, 3, 4, 4 bar, 2 bar pullback. You know, generally we might see the completion, and then we see 1 bar like this, which is the up bar, or what we call a line change bar, and that will definitely be out to the upside. All right, let me know. Give me a thumbs up to make sure that I'm doing my work, and also a little bit of encouragement to me too. So again, we want to look at the US sector. This is the US sector going back to 3 months. All right, of course you can't see this. Let me just move to the side here. This is the 3-month calendar here. All right, and very important, because we're talking about diversify now. XLK, it's an ETF stock. Okay, so it's an ETF stock on technology, which is last 3 months been up 25%, finance been up 25%, communication up 23%, real estate up here. But we want to pay attention what is trending over the last 1 month. So if you go to the year to date, which is from 2nd of January 2024 to 30th, I think that was yesterday, you can see XLC, so communication, technology has fallen back, finance is still holding there. We have also consumable, the discretion consumable. This is the P stand for industry. V is healthcare. Actually, V is healthcare. So you can check out the later one. LI is what? What is LI? I can't seem to remember so many codes. Okay, LI is industrial, right? Because they are a bit different. This one is industrial. Okay, P is XLP. P is stable, consumer stable. Because in US, they have consumer stable and they have consumer discretion. For Malaysia, we need to have consumer satu saja, right? So that means stable means the defensive stock. Then you have the consumer V. Where's the V? Where's the V? No, this is a healthcare. There's another one is consumer discretionary. Okay, I just can't find it here. Maybe it's just somewhere down here. All right. So that tells you there is a likelihood of change in player that we see so far. So this change in player will certainly tell you. Now, do take note. The US sector discussed here will influence to the KLCI. But of course, KLCI, we have to look what are the strengths, which we do use our VSA 360 to compare. Now, if you are not a member yet, no issue. There will be some details that I'll talk about how you can get hold of our VSA 360 dashboard. And for those of you who are listening that our members, use this as a tutorial to guide yourself to move out, if you want to, from technology and AI to other sectors. So what's happening right now? Again, we have to play into the ear, right, and also into the hearts of the foreign fund. So you can see from here, foreign funds would likely to push and broke through the 1500. There's a little bit of foreign funds. So as long as you see the green line here, that's the foreign fund moving. And then you have the red line here, that is the outflows. Okay, the outflows and the inflows. So definitely when you see outflow, stock drop. Okay, the stock drop. So Tuesday evening, we are a little bit of downwards. So let's see how the market will react tomorrow. We'll get those data tomorrow. Of course, should the market break above the 1512, right, then this is meaning foreign funds are coming in inflows. So there are positive inflows coming in. Pretty easy, right, to understand this. So that is what we are looking for. So what we want to do now is, assuming that you want to diversify out. So if you want to diversify out from the very hot sectors, because you have technology, and even some of you may have, the rubber glove stocks. You bought a lot of the rubber glove stocks, and right now you want to move out. And one of the reasons why you want to move out is to reduce the investor overall risk profile, right? You can move it to market cap. So in our context, we generally focus at the large cap. Okay, the large cap stock being the volume that they are, and then the different industry, which I'll talk about slightly too. All right, so in this slide you can see taking a bit of everything, not just holding up Apple in here. So what to do now to diversify out? So here's the main strategy. This is the main strategy here. All right, you can take a picture of this one if you want to, because that is the gist going towards the next couple of slides. So you want to decrease your technology, which means your technology you start to take profit. Okay, now this also apply if you have a US portfolio. Okay, US portfolio, US market, US portfolio on the market here. So you start decreasing your technology, take some Apple stocks, and then you want to increase, the keyword increase, into other sectors: energy, consumer, industrial, and finance. That's my take right now based on what I see. Okay, so that would give you some sort of, of course you can decrease a bit more, maybe you reduce 20 to 30% of your holdings. All right, and then move up to here. Can understand? You can understand, give me a thumbs up, so I'll make sure you all know this main strategy that we are practicing right now. It's not that difficult, okay, this strategy in here. So here are the steps. So to diversify into other sectors, here's the steps to that guiding portfolio. All right, so let me just move up a bit, since yeah, you can see better now. Okay, so here you want to look for the next sector. Definitely we recommend the VSA 362. Okay, the VSA 362 provide the overall strength comparison of the sectors, the individual stocks, which is either the leader or the lagger. In each stock we need to know siapa yang is the king, siapa is the poor man. Right, we must know who is the king. Then once you have it, is that don't be like this boat here. So many stock palam in one sector. You just because you sell off your technology stocks, okay, and you pile everything into this sector. You don't want to do that. So you only want to have no more than two, maybe three stocks. Then have 2 to 3 sectors also. So which means each sector A, sector B, okay, and then you have sector C. Then you have 2 to 3 here, maybe 2 here, and then another 2 here. All right, so that's what I'm talking about. So all in all, you could have maybe around 6 stocks in total. Or if you don't have that kind of money, you can just keep to maybe 3 to 4 stocks to diversify out. And of course, choosing which stock, I leave it up to you. You can also use the Robi rating plus VSA setup. Now tonight, we will still continue from where we left off last Wednesday in regards to the advanced setup. So especially for our premium members, you can use this as a tutorial to watch for those setup that we talk about, combining the indicators, the market stages, as well as the trend line, the auto trend line plotter. Now look into last Wednesday live Facebook, or you can check it out on the YouTube to see those tutorial again to make to refresh yourself. So we can use the Robi rating and also the setup. But do take note, many of the stocks that are up running, they will have very low rating or 0 rating, meaning it is not available NA. So keep that in mind too. So this is the framework that we have. Then we go on to our first area to notice. So you can see from here, energy is getting stronger, property is coming back. Okay, so this is important because this is in VSA 360, which tells you which are getting stronger. You can see technology from last week to this week, last week, this week, last week, this week. This is industrial product, not yet. You can see still weak. So we have strong one is this is property, this is construction, this is finance. Finance is becoming stronger. Then telemedia is weakening, and also plantation is weakening here from last week to this week. So some of the things strengthening in here is utilities. KLCI is here. This is REITs, not much to trade for REITs, healthcare, consumer, technology, and also industrial products. Okay, so what we have seen, the area that I really like, I mean, of course, you can have your own preference. You don't have to follow some of my suggestion in here. You can see KL Energy just turned green Pentagon 4 days ago. Technology has turned red Pentagon. Consumer turned green Pentagon also. So that also tell you, no doubt consumer is weaker, but it started to turn green Pentagon. And one of the best way to see this is actually lock on to the VSA 360. So once you have this, you can go to the dashboard, re-lock in again. And this is where the magic comes out. So you can see from here, you have the, just now I was talking about healthcare. Healthcare just turned green Pentagon 4 days ago. You can see, right? 4 days ago, 4 bars ago. All right, including 26. So that's pretty good. Okay, and you can see from here, then you have consumer 1 bar ago. Okay, consumer also turning it. And finance has been in a nice upwards, continue to go up. 26 bars. So what are energy also turned because of the Red Sea attack that's ongoing in here, right? So that what we see for the energy. Okay, so with that in mind, you need to decide what are the sectors. So the sectors that I'm looking at will be utility. So once you have the utility, we need to, so once come to the utility here, then you can also go to the screener and you can go to the KLCI sectors. Okay, so just now we have seen, okay, let me just make this a bit smaller so you can see this. Okay, and you can see from here, we will switch to the utilities. Right, and we click submit. Okay, and we want to ensure we use the LT and ST-5. This will give us the best setup. And right from here, right, you can see PBA. So we sort by the price. So these are the smaller the price, the more lower the market cap. So we want to be the biggest price. PETDAT, YTL Power, MFCB. Okay. So what I've done is that I've divided, this is for finance, so it's very similar. We're going to go through that. So what we're going to do right now as part of this tutorial in here is to categorize the chart using our member advanced VSA setup with trend lines and market stages. So you need these two indicators to pair it in. If you have not got it yet, you might want to consider connect. So we do have 3 patterns, as I said before. The reversal pattern is like you see this trishaw, very safe, very easy, like low risk, but we wait for your higher high. Then the second setup is a pullback with an uptrend. It has a best moderate risk and give you a very good reward. So it's a market is still going uptrend, then you wait for a slight pullback, and that's what I look at. The third one is a bit risky, where we see the market going. Now it's very hard to find. Maybe you do find it in utilities like YTL in there. There is this change of momentum, you can still go from there. All right, so our first sector, dividing into leaders and laggers. One of the ways we look at the leaders is we see the largest cap and they tend to front run. This is more of an opinion piece. Okay, and depending how you see it, if you look at it, it's one of the biggest player and usually has run a lot. So let's take a look at, in this sense here, you can see we have the YTL. YTL. So you can see YTL has been in a nice uptrend, but what we want to do is to switch over to, where was I need to switch back to this. Yeah, I need to switch to this one. So we want to have this is the trend line that you see, and we want to have the market stages. Okay, so YTL, So you can see YTL just touch in here. Now it's going through a pullback. You can see this is a gray bar. Okay, so a gray bar, you wait for it to turn back green, and the green pentagon, that's what. So that's what is, they are the leader, but they're in pullback area now. So YTL power. This looks like, okay, now for this one, it does look like from this standpoint onwards, you can see, that's what we call the change in momentum. The change in momentum, like here, blow up, you can see, push up here. So you need to have one more. Now, there was a change in momentum here, but the market paused again. So if you like the change in momentum, YTL power may be a good one to look at. But right now it's doing a gray. You just need to wait for it to, if you buy on a pullback here, that's when the market likely to pull. But I prefer a lagger, MFCB, which not many people talk about. They are also going up. You can see, up in a nice trend here. It went through a pullback. Okay, went through a pullback and then started still in a nice uptrend. So right now, this may also be a completion of the pullback and continuation up here. So keep an eye on a lagger in here, which not many people talk about it. And one of the better ways you can also find out more, right, rather than me telling you, is to get hold of this screener here. There are some smaller cap stocks. So you can see Malakoff, which is much cheaper. We can look at Malakoff. Okay. Still a nice uptrend here. Okay, and you can see right now is pullback in the uptrend. So Malakoff, for those of you like to trade the 30-cent stock, this is a pretty good one. Okay, next one we have is industrial products and services. So you can see from here we have Sunway are the leaders. Just because they are leaders and laggers, that doesn't mean you have to buy the laggers. Keep in mind, you can also buy the leaders one, but make sure the leaders are pushing ahead of the market. I think this have to be. Let me just move this a bit. So Sunway here, you can see Sunway is a nice push bar. 1, 2, 3, 4, 5, 6. So this is a careful one. You can see once it break out here, 1, 2, 3, 4. This is what we call a change in momentum. But right now it's about 7 bars, so it's likely to pull back very soon. So let me just look at the industrial. Okay, there's one more because it cannot be YTL power. Let me just look at it again. I'll show you how I look for it. So click on submit. Okay, comes back here, and what you do, you put a minus 0.5, and then a minus 5 here, and then you go by turnover. It's M Cement, which is also another YTL group also. Oh, FC Lafarge. Okay, this one is Sarawak Cable has been down. BJ. Okay, so it's M Cement. So let's take a look at M Cement now. So you can see M Cement, right, is a leader. This was one widespread 7%, but right now is building a very nice pullback. You can see this is all the gray bar here. That means it's a pullback right now. Okay, so this is a pullback. As I said before, you just need to reference them back. So it's pullback with an uptrend. How do we know it's an uptrend? Referring to here is that the auto trend line is still pointing up, but we have the gray line pullback. So you just need for the green bar to have, and that's a nice one in here. Able to diversify. Let's take a look at KGB. KGB is also pullback, haven't completed yet. The pullback. Now here we have to be very careful because it's already red pentagon already. So if we do break below the 2 ringgit 14 cent, the market might go under, the market stages might go to the what we call the red line, red bars. So red bar means we will see a beginning of the sell-off. So that's why it's important to put the market stages. That's telling you the market timing. The trend line that you see here, okay, that will tell you the uptrend. Can you understand this one? If you understand it, give me a thumbs up. So that's how we are able to do the market timing using this advanced setup. But you do need these two tools that you have, right? So we look at BJ Corp. You can see from here, BJ Corp still in uptrend, a pullback. Now we have a pullback here, 1, 2. So after about 5 bar, the market will pull back, right? Usually most of the cases. So pullback in the uptrend, so that's pretty good for industrial. Now third one we have is financial services. Okay, financial services. Of course, there's some of the bigger caps we have it in here, but I do find Affin one of the more better trades, I suppose. Yeah, this is runaway. Okay, you can see 1, 2, 3. 1, 2, 3. This is a change in momentum, riskier. So yes, 1, 2, 3 in here hasn't turned yet. Hasn't turned. Yeah, it's still in blue triangle. But since from here onwards, so you can see the green pentagon very strong, and be up almost 25%. For banking stock, very powerful, man. 25% in here. So this one in here, 1, 2. If you do the trade, this will be a riskier trade, as I said before. Still maybe second or third buy in the change momentum. Okay, let's look at public bank. So important you look at those stocks. Now public bank is more of a lagger. You can see it's still a nice uptrend. You can see here, haven't gone through the gray line here, so haven't hit the red line, but it's still in a nice uptrend. So far for this year, only up 2%, right? So RCE cap, another lagger stocks, right? But it's pullback right now. You can see 1, 2, 3, 4 gray bars here, hit the top side and then pull back, right? So still in a nice uptrend in here, pullback. So let's see if this, you have to wait for another green bar, and that's the area to be going in, okay? So point and thing is, look at your diversification of pie. So this is where you have to do your maths. So let's say you have 100,000, 200,000. If you decrease your technology stocks, you have make this a bit smaller. Maybe it used to be like this blue line here. And then when you take for profit, you make it into this pie chart here, smaller one. Now will become a yellow or even maybe an orange, smaller one. Then the others, you increase, whether it's energy, consumer, industrial. And remember what I said, don't put more than 2 stocks to 3 stocks per sector, and have about 2 to 3 sectors. So that's the best way. So look at it as like a pie chart. That would put you in a better position. So I hope that you all learned something from tonight. How a very simple method they do, but you still need those tools. The VSA's 360 sector. Now if you don't have it, then you can use the Smart Robi, because Smart Robi also have the hot sectors. Then you just drill down to those level. More things to do, but definitely can be done using Smart Robi too. But VSA 360 make that. Now we're going to be reviewing the major factor which is still driving this stock market that we have, because this event's important. So what we just talked about just now make a lot of sense, that you're still able to buy into those sectors. So you can see here, because of the DPP winning the Taiwan election, the party DPP, and that's why we saw the Hong Kong and Hong Kong sell off close to about 5% from the 13th January onwards. If the Kuomintang won, then you'll see the other way around. Hang Seng will turn. Right now we are in the Chinese New Year rally. As I said before, the rally so far has only been focusing on the the KLCI. The small cap stocks, let me just share with you the small cap stock, hasn't been moving much. FBM, SC, I've been telling the members on our Monday training, you can see small cap stocks, still uptrend, pull back here. You can see 2 gray lines here, right? We don't want it to turn like this. If it turn like that, it's a big wash. Okay, FBM, small cap stocks, which is generally many of you are looking. So the large cap stocks still going up in a nice trend. The interest rate cut, there will be a US FOMC meeting, so likely they will hold on to the interest rate, which is expected. That's why we see the stock market coming down on here, and also the reporting of the Apple and Microsoft may be disappointing too. So that also tells you the sell-off that we are getting, and that's why our KLSE is down. Then we have sell in May. Seasonally, May, April will be weaker. Then of course the constant year of bombarding recession. If the market were to fall a bit more, you'll see a lot more people coming of recession. But the November 2024 US presidential election usually averaging about 7 to 9% up. But I do think that our Malaysian market, with the start off of the government project on the big construction spending, I think that will come too. Okay, this one I'm probably going to skip, all right, to just save some time in here. So for our members tonight, we touch on the pullback with an uptrend. We didn't come across any reversal pattern, right? We do see a few change in momentum. That take note, the change in momentum is the riskier trade, but use the market stages to take profit as you go higher in here. Now I also want to talk about how well our members have performed in here, and because of our constant back testing we have been doing, we are pretty excited to share that our Pentagon back testing program, as well as some of our members are using it, are doing much better. So you can see from here, from our historical back testing, you can see from year 2023, it was a positive year, right? You can see the KLCI was small cap, we're comparing small cap. Large cap stock was still down about 3 to 4%. Okay, so we compare to here, you can see it's up 25%, 35%, and smaller around 19%. Only these two are particularly out. So why we are confident is that this is where the premium membership makes a lot of difference, because what we want to do is to ensure that you're able to grow your equity curve. If you start with 100,000 and after maybe 1 year in 2022 you went down to let's say 50,000, so 50,000, okay, then you lost 50%. That's not good, because from 50,000 to go back to 100,000 you need to make 100%. So you can see the difficulty, right, if you don't have the supervised coaching that we done. So in our supervised coaching is what we call our continuation learning, and just a little bit more on that. So our 2023 was a good year. We can see the series 1, right? You can see from here our members doing 7,000, 5,000, and then just want to reflect, and then 24th they're doing much better in here, right? And then 31st even increasing. You can see one our listener James was one of the top contender, right? So you can see this is a real transformation, why we are really happy with our supervised coaching. And we do have that environment you can feel. You can see here Mayfan 7 and gone up to 13 and then gone up to 14 just in 1 week. Okay, of course these are all virtual trade, but the whole point what we are trying to address here is practice. If you cannot practice in a very safe environment, how are you going to perform well? Not until what we call the virtual trade, the simulation in here. Then we got, even Yi has done pretty well. You can see Yi was not in the contention. Yi was only 5K and then gone to 10K and then gone to 12K. They were all given 50K. All right, all 50K. So that is why our members outperform average investor. Now, if you are an average investor and you subsequently struggle with this, I think maybe this is what you want to look at. And also in our monthly orientation, we talk about how able to grow the equity curve. You can see from here, right? That's almost a 30% return from November in here. Our members through our VSA 360 program in here. Now, if you are looking something to help you improve and be good in your VSA 360, this is definitely one of the programs you want to look at. You can see from September up 20%. So check out the QR code, and there's a video I talk about it, how our members outperform the trader. If this is something that will help you, like our Series 1, Sukumaran Mayfan, they all done pretty well in here. So one of the things that we do share a lot with our members, if you are not there yet, if you're from the public, you want to try some of these diversification method in here to help improve your performance going forward. Yeah, something to consider, right? So I'll end with a quote: give a man a fish, you feed him for a day; teach a man to fish, and you feed him for life. This is quite true. That is what's happening to our members. The virtual trade that we talk about, our premium members, you have seen the kind of great result they have done, and this can be your result, right? If you do at least some of the things that we talk about tonight in here, like the diversification and so forth. Okay, so I want to end my session tonight a bit earlier. As I said before, just keeping it to about 45 minutes. And also, if you have not opened an account yet in the US market, our partnership with USmart, using the code NYVJPA, will get you, using that code, you'll get you 400 credit of Smart Roby. All right. So don't forget to join our Telegram chat room in here and our free stock market. Of course, if you have any questions, feel free to pencil those in there. And if you want me to review any stock, I'm happy to do so. And don't forget, tomorrow is a public holiday, okay, for our Bursa, but the US market, the rest of the world is open because we have the Wilayah Day. All right. Have a good holiday for those of you who is having in KL, but I'm in Petaling Jaya, so I'll be working tomorrow too. That's all I have for tonight, and I'll see you on Friday for our breakfast show in here. And for our members, use this as a tutorial for you going forward to look for those stocks. Thank you, Joseph.